Let's start focusing on some entries. We're back on the euro versus the yen. We are on the daily. We need to highlight our profit point. This could be one profit point here. And say, for instance, we are bullish on the euro in this case. So we drop down to the 15-minute after highlighting the profit point on the daily chart. So prices are in a no trade zone at the moment. The trading zone is highlighted at the bottom here from the daily chart. All we need to do now is practice patience and wait for price to come down to the level of importance. As we are waiting, we're seeing divergence, we're seeing possible entries, but we don't take these entries. The thing is, we are waiting for the first point of contact. We're waiting for price's first contact with the profit point, and it happens right here. And it creates a low. So if we look at this, we have a low and then a lower low. So if RSI remains divergent, then this here on the top, this area would then be an entry. But only if prices remains diverged inside the area of importance. Let's see what happens. Prices are making lower lows and the RSI is also doing the same. So there is no divergence at the moment. Here we have another low. We bring the line down and we have a low being created by the RSI. So if RSI remains slanted up while prices goes down, then we are A for away. Here we go. This is an opportunity now because we have lower lows and prices makes even lower lows. And look at what the RSI is doing. RSI is divergent in that same area. So now we have a qualified W. If prices goes through this level, look at the W. Comes down, it's a level. It's the low, goes up, creates the midpoint of the W, comes down, prices makes a lower low, and then goes. If prices manages to get through the level here, then we have a perfect entry. So the strategy rules are that we place our buy stop order 3 to 6 pips above the midpoint of the W. And when prices are very volatile on a pair, like with this one, the euro, the yen, and the pound versus the euro, those are all high volatile pairs, then you could even move the entry point a bit higher above the midpoint of the W when you are in a buy situation. So what we could do is place our buy stop about 3 to 6 pips above the midpoint, and then our stop loss below the lowest low, and then our take profit above there. I'll go over the other points in a different video where exactly to place the stop loss. For now, I'm focusing on the 3 to 6 pips above the midpoint. Let's see what happens next. Prices on the next bar goes up and looks as if it takes its profit on during the first day. If you had a position left open, let's see what happens. Prices comes down against you after taking your first profit. Remember, with these type of trades, we're always trying to trade across the profit zones. So in this case, we have a support profit zone, and then we try our best to hold our positions or hold at least a portion of the position until we are either stopped out on a break even on the last position, or if prices goes up all the way to the next barrier, which is the resistance barrier, which in this case it would probably have made it. Let's have a look at how the trade looks now. Always risk much less than the amount of potential profit. In this case, it's like 137 pips. Another example on the euro versus the yen. We come to the daily, we've identified our two areas which sandwiches our playing field. We have our resistance level, our profit point for the resistance, and then our profit point at the bottom here for our support. So within that range, remember from earlier lessons, the range has to at least be 100 pips apart. And this one is about 300 pips, 345. So the potential for profit is quite a great one. So what we're waiting for is for prices either to go up to this level and then look for a manipulation on the 15-minute. So let us quickly drop down to the 15-minute and see what prices is doing. So we have our top level here, our resistance profit point. Let's see how prices actually approaches this level. Always important is the first touch. So we have our first touch of the level right here. So now what we need to look for is a divergence in this area. So we call this the first high. So prices are coming down now and it's creating, as you can see, prices are making highs here and coming down, and so is the RSI. So there is no divergence there, but we still have a high in this area. Prices comes down and then prices are slanting downwards as if it's creating a wedge, but the RSI is doing exactly the same thing. Prices comes back, plays around with the level, makes as if there's going to be a breakout going short. You see, this is the accumulation phase on the 15-minute. It was a big distance from the bottom edge here all the way up. So the market makers are they are deciding in this area either to go short or to make a true breakout to the long side. But irrespective of that, we are still looking for our setup in that area. Remember, there's a whole lot of stops in this area here now. Short sellers has placed their stops just up here. It's quite easy for a manipulation and a stop hunt. If we look at this one, prices made a high there and then a higher high, but then the RSI does the same. So there's still no opportunity to trade there, but we can call this another high. All we're doing is following price. Prices are really in a tight range right there. Makes as if it's coming down. So in this whole area here, there was absolutely no opportunity to trade. And then here we get something that looks very weird. Prices are breaking up even higher. And look at this, prices are making a very strong push, very strong surge up. If we can imagine all of these sellers in this area here, these are all sellers in this area. Let me highlight the area for us. Sellers were placing their orders down, selling, piling on more and more orders. In this area over here, there's even more sellers in this area here because these are retracement sellers. On the first go, there were level sellers. As price comes into the level, all they do is immediately sell short, immediately, without any confirmation. But the guys on this side, they are looking for a retracement first, and he gets it just here. Prices comes up, it retraces, and then they sell. But look what happens immediately. So this is a guaranteed stop hunt here, and these here were definitely stop loss orders that were taken out. So after this point, one can really look for an opportunity to trade going short. But there was no valid opportunity based on the usual or based on the beginner strategy. So let's see what happens if prices comes back up to the level again. So if all we are looking for is shorting opportunities, then all long opportunities, we ignore them all. Prices comes back up for a second attempt at the area of importance. Prices makes a high. And then here, we can see prices made a high and a higher high. One high and a higher high. And then the RSI is also doing the same. So there is no setup in that area either. Continue. Then we can calculate this, or we can use this as a new high. See what happens now. Now this week, this year is a very good opportunity for us, because this is an area where we are looking for sells. However, when you look at a candle such as this, where the wick is much bigger than the body, then this is like a pinhead candlestick pattern, and naked traders or traders who only look at price action would look at this wick as a definite long opportunity. So we need to be very careful in this area. This is one high already. Let's take that. See what price does here. And then goes up. Very now. Because this an actual higher high. Which means that if the divergence stays exactly the same as this, then we would have a qualified M. And that M would be pushed up from this area. This could be your first point. Makes the high. Comes all the way down. And that would be the midpoint. Prices goes higher high. Prices comes back down. So if the RSI remains the same, then the entry would be 3 pips below that area. So what we could do is we could put our sell stop 3 pips below the area. We could put our stop loss just above there. It needs to really be a bit higher than that. And always we need to keep looking to the left to see if there's any structure where we could place our stop loss above. And then the last thing we need to do is we need to put our take profit. And in this case, we have a massive range that we could use as a take profit. Let's see what happens next. Yeah, we need to, so this is divergent, everything is good. The only thing is that we need to really make a better attempt at placing our stop loss. Let's look at the daily quickly. See, this is all before our trade is actually triggered. We do have a pending order, so we are waiting on our order to get triggered. At the moment it's not. So what we can still do is we can look at the daily. We can see if we are in a good zone. We can see also if we are extended beyond the mean. We can also look for where could be the best place for us to actually put our stop loss. Like in this circumstances here, we can see there's a wick, so there's no good reason why we don't move our stop loss up here. It would be a better idea to move our stop loss up to be safe in this area here. So let me do that quickly. What we need to do is go to the terminal. We need to modify the order. So the new stop loss order, instead of there, we're going to put the stop loss above that area. Modify that order. Also, as you can see here on the daily, this here would be our target area. So this would be a massive example of a complete range trade. Let me modify that order again so that we can get that stop loss or take profit to a better spot. So there, let's put our stop. Let's put our take profit there. Now we have a very good risk to reward. Let's go back to our 15-minute and see what happens now. Feel much safer about our stop loss. Keep on going. And eventually we get triggered and prices are coming down in our favor now. Let's move this. You can see that the outcome prices are against us again. So we need to be patient with these types of trades. Prices are down. We can also get rid of the RSI. We can watch price. If we had a chance to take some profits and then we just let the trade keep on going. So this is my style where I just keep the trade going, or at least a portion of the trade, so that this is all possible. So as prices are playing around, you have your targets and you have your stop losses in order, and you just let price do what it needs to do. So you could take some profits. You can look at how distance between the orders are. You can see how far it needs to go before you get to take profit. You could move your stop loss down. So there are numerous things, but all these needs to be planned ahead of time. So you need to plan your trades and then just stick to the plan as you are trading. Now this is probably a number of days that the trade is still going in. Depending on how you manage your risk, or depending on your risk appetite or your patience, you can decide beforehand what it is you are going to do. Because there is no guarantee that it's going to hit the target, and there is no guarantee that it's going to go against you. And we'll calculate the days. Let's keep this one running up until either it's the target or it goes completely against us. It's very close now, so you could really lock in some profits here. We're all the way up to the current price, so there is no more history there. Let's try and do that on the daily and see. Up, and eventually it takes your profit.